using the higher time frame for convictions to find some scalps, to find some longer term intraday trades can definitely be beneficial to you if you are trading prop firms, even if you're trading personal account money. But I think using the higher time frames, getting into those 30-minute time frames, into those 60-minute time frames, can definitely be beneficial. What I want to kind of run through is, if we look at this chart, I've got a few different moving averages on this chart. Some of these moving averages are going to kind of paint a picture. They're going to tell a little bit of a story. Okay. So if we kind of look at today's price action, today being March the 17th, you're going to see that we were kind of pushing higher in that pre-market overnight session. Off the open, we kind of put in a little bit of a blow off top, and then we proceed to kind of pull back. Now, a lot of times traders will look to say, hey, you know what, that's the end of the road. Let's just get short in this market. And although there's opportunities on a small time frame to make money in this candle here, the reality of it is you're never really going to time it correctly. You might be shorting somewhat close to here and the market is bouncing, and then maybe you get short here and then you get wrecked and you get stopped out, right? Here's how I use these 1 hour 60-minute candles to help keep me on the right side of the trade and to help me stay a lot more patient. Now, don't get me wrong, I trade the 1 minute time frame. I'm looking for scalps, normally on the 1 minute time frame, looking for bull and bear flags, for quick momentum breaks to the upside or to the downside. But when I really am trying to buckle down, okay, because there comes a time in everyone's everyone's journey where maybe you're really close to passing an evaluation, or maybe you're just a couple of days away from being eligible to take a payout. You really want to take the best type of trades. And where my trading style kind of differs from evaluation to funded accounts is, evaluations, I'm quick to take trades long short on the 1 minute time frame. When I'm in a funded account, I'll still take a couple of those style of scalps, but I'm mainly looking for like one good trade or two good trades. And if I can get that, then I'm typically going to be done on the day, because whether you're trading a funded account or you're trading personal live capital, the key there is protection, because there's a lot bigger money and there's a lot bigger potential risk at play, versus on an evaluation account, it's $30, it's $50. We know that if we blow the account, that's the most money we're going to lose. Versus on the funded account side, if we lose our account, we're potentially losing out on $1,000, $2,000, $3,000 worth of a payout this month on that one particular account. So what does any of that have to do with 60-minute candles? Well, if we look at this chart, we've got a lot of rising support here. Okay, I've got a 20 simple moving average. I've got a 200 period moving average. I've got a 50 SMA. All of these moving averages are kind of rising. All of these moving averages are very overlapped. This is my short-term moving average, which is the 5 and the 10. These are all overlapping this bigger trend of the 20 SMA. In this particular case, I'm not going to be so eager to short right into demand. Okay, and especially I don't want to short into a demand so significant as a 200 SMA. So what I like to utilize is the first hour candle of the day. Okay, if we look at that first hour candle of the day and we look at that range, yes, we do lose the bottom of the first hour candle's range. Yes, you probably would have been able to make some cash here on a very quick scalp into this demand. But if you just quickly glanced at this chart, even in real time, before we know that it's going to come down here, before we know that it's going to reverse, if you just solely look at this candle, okay, before this even starts to flush, you can already kind of answer yourself the question: if we confirm the bottom of the range, is there an opportunity to make money? Well, yeah, sure, there's always an opportunity to make money. Is it probably the smartest thing to do to go short right at an area of demand, especially when it's double stacked and especially when you're kind of punching down into a 200 SMA? Answer is probably not, right? So before we even see this move, before we even get involved in any of these downwards moves, we can just pretty much say, hey, you know what? If this trade does confirm short and the market does go down, because it did go down, let's just let that go. Let's leave that to another trader. All money is not our money, is what I like to say. Let's wait for the better looking trade. The better looking trade to me in this particular scenario was when we had a 1, 2, 3 candle pullback at an area of support, at another area of support, and a failure to close below this 220 SMA. To me, I'm looking at a 3 candle pullback, followed by a consolidation, followed by some more consolidation. And what I'm looking at here is a sneaky channel, right? So I know that I've got room above this sneaky channel off of support to kind of maybe take a little scalp here and not even necessarily try to target this big move, because of course we don't know that this big move is going to happen, but to take a sneaky entry here, right there, and try to get out somewhere here, somewhere here, somewhere here for a few points, for 10 points, 15 points, 20 points. Okay. Now here's that's just a little bit of a scalp, on a bit of a reversal. How about this? Here's your first hour candles high. Here's your first hour candles low. Now we know that it's probably not the wisest thing to do to short into demand, but what about up here, right? We've got nothing ahead, meaning we're already over all of our levels of supply. If we can confirm, whenever that case may be, the high of that opening range candle, which happens to be here, there's a bigger potential upside that we're going to get some serious follow through. Okay. And I would rather take a bet, because again, remember, just because you have candlestick patterns and just because you have a strategy doesn't ever necessarily mean that it's going to work. But I would rather bet that I've got a stronger case to make money here going long than I got a stronger case to make money short. Now, the problem that I see that's going to happen is most people are not going to sit out 1, 2, 3, 4, 5 hours of the day to then wait to take their big position towards the last hour to 2 hours of the market open, or of the market session, right? That's the hard part. Now, how do we discipline ourselves? How do we really train ourselves? Well, it's going to take day by day that you getting super comfortable not even taking a trade. I remember years and years ago when I was trading, strictly stocks, there would be 1-2 days where I would not even put on a trade because the ticker symbol that I was watching and the level that I was waiting for, whether it be from a weekly or daily time frame, did not confirm. And if it didn't confirm, that meant that I couldn't put money into the trade, because realistically speaking, I need to see a significant area broken. I need to see a significant area of supply tested. I need to see a significant area of demand tested. And again, you're only getting like one real move throughout the day. So with that being said, I hope you guys can take something away from this video. Hope it helps you. I'll see all of you guys in the next one. If you guys need Apex evaluation accounts to maybe practice using higher time frames, 71% off using code DAnthony. Also, I just got my link with daytraders.com. You guys can also use code DAnthony to save a bundle there. I'll see all of you guys on the next video.